you the reimbursement form, the CMS 15. They will create it for you. So that means rather than sending it directly to the insurance, you will send it to the clearinghouse to the insurance. That's
so
called
if
clearinghouse.
you get a denial of claim, you have to reclaim.
Yes, you have to send the claim again, but it will take time. So that's why the first time you send it, you need to send it correctly. So CMS.gov. I want to print out the form for you so that you can, you know what's form. This one here, form here. Can you see here? So I'll print out this one. So look at the forms, each of these. Usually on the exam there is a question like which of the following, the form, what's the name of the form that you use? Or sometimes they might ask you the locators. Okay, so it's like this. You need only this one.
You want this or not? It's a breakdown of what you
The rest is just additional papers.
everybody should do the same. You know, you can do this. No, you can do this. And you bilingual, so you get with them Spanish.
Okay, so that is what we call the reimbursement form.
VA.gov.
So this is the 1500.
Yes, that's 15 CMS 1500.
Travel.
Really? To where?
What does CMS stand for?
For what?
Some success.
CMS is Center for Medical Services.
Uh,
So that is the main, that is the really the big organization, the big body.
Virginia.gov.
So really we can talk many things on insurance. So, okay, we discuss something. If you have a question, we can discuss that one on insurance. You have a question?
No,
Okay.
it's a lot of
Okay, finance. Finance, I think. One thing to tell you on finance is that there is what we call general accounting equation. Do you know that? A general accounting equation. This general accounting equation is like this. No. Okay. Anyway, this is called assets is equal to liabilities plus equity. That's called a general account equation. Okay, so what do you understand by liabilities? Liability is what? Something you borrow, something you have a loan. That is what? A liability. Yes? Let's say, for example, you bought a car and you are paying it what? Every month. That is your what? Your liability.
Oh,
Huh?
I'll say car note. I got you.
Yes?
Yes, sir. I got you.
Then equity is something that you paid off, something that you paid with your cash with your money. You don't have any loan, you don't have anything. That's called equity. So everything, the liability and the equity is called what? Assets. Okay? So let's say a medical office, a doctor, he has $400 of, he bought a computer and he has $400 on liability. That means he's left with $400. Okay? And he paid for that like $600 cash. So what will be his assets on this? 1,000. It means the assets will be $1,000. Okay? This is called a general accounting equation. It's very important all over. It's a general account. Everyone should know. Assets is equal to liabilities plus equity. So you can calculate your own assets. Okay? Just what you will be. Sit down and check your liabilities. And the other is what we call, there is what's called net income. Net income is equal to, you have a gross income minus what? Expenses. Okay? Let's say your gross income, you're getting how much, and then calculate your expenses, all your mortgage, your houses, or your rent.
True expenses.
Okay, your liabilities, like your payments,
Bills, your fees.
your gas, your electric bills, your cell phone bill, everything, all of these are, then you subtract from your gross income, and that is called your net income. Okay, sometimes you might get into negative if the expense is what? Higher than the gross income.
Do you believe in that though? That net income shit?
Yeah,
Excuse
yeah,
my language.
yeah.
There's a lot of people that, their gross income is not as much as their expenses are, but still come out on top.
Yeah, people, okay, they try to adjust that. Let's say now they'll be in, that means their net income is negative. The next time they try to pay whatever that they have, and they try to balance, and then other expenses will come, then they borrow, and then again.
Spend money they don't have.
Yes, so every time that's how it goes. Yeah, that's what America.
Yeah. It's crazy, man.
Huh?
It's crazy. But businesses don't really do
Huh?
nothing. Just speaking of that.
Yeah.
But when you have a business, businesses don't do that. They tend to
Yeah,
buy
you
a
see,
lot of shit.
if you have like a good income, then that's why if you have a business that earns you a good money, that means always because you are earning additional money, so that means you will come out of this negative thing,
But you still have
and you will go to the saving part. But still, there can be something that you pay.
You still gotta purchase stuff too.
Yeah, you have to purchase stuff. You have to buy. Maybe you need a bigger space
And if
or
it doesn't
mortgage.
get purchased, then it's a liability.
Yeah.
Your own liability.
Yeah, still. Yeah, but you see,
That's crazy.
you need to. That's what we need to do. That means people are working here, there, and to get their income more better, so that you try to come out of a negative
It's not
or a more okay, or try to cover all your expenses.
financial responsibility. Because they
Yes.
can have the money, just don't
Yes.
spend it right.
Yeah, that is so that's the finance. So, okay, whenever you are working in the medical office, usually there is what we call a petty cash. Do you know petty cash? Petty cash? Petty cash is a small amount of money that is left for you in the, okay? So, but for what are you going to use that petty cash?
Redbox, Netflix,
So this is only for small expenses.
bars.
Not for to have a party if someone is leaving the medical office to get a party of that. That may take a big, yes?
Cash you don't care about. Pretty much. Right?
Small, like stamps, like something that's very important to cover with small expenses. That's what you need to use the petty cash. Don't need to use it.
Oh, you speaking on this terminology. My bad.
Eh?
My bad. I thought you was asking, do we know what it was?
Yeah, that's what. Yeah, you need to use petty cash.
Disregard.
Okay. So sometimes you need to post your money or any deposit on the. If you are working on the HR, you need to post it. I think, did you go over that?
What's that?
On the HR, on Medisoft, for example, you need to post. How do you post Medisoft? Posting deposits or posting payments. For example, here, let me show you here on our site. If you want, let's say Aurel, she's here. Okay, what I do is that, let's say she's paying $100.
When you
Then-
mean post?
Yeah, post. Let's say she pay $100. What I do will be, I put $100. Okay, for what? For this and this. I put. Let's say she paid with Visa. She paid first on the online thing, and then I post it here. I say, okay, if I click now, it goes. Okay. Okay. Then it will post here. That's called posting payment.
Understand.
Okay. So when you go to Medisoft, that means you need to post payment not only in all electronic health record. Let's say the patient comes and she or he makes payment, yes? So you need to post it. How do you do that?
Question. Y'all go over medical bills and medical assistance?
No, I have to give you a short glimpse because there are questions on the exam. And I like that question.
In this chapter, we're going to show you how to apply payments in the deposit list. When you receive your EOBs and your insurance payments, you want to get those posted into Medisoft right away. In order to post insurance payments in Medisoft, click on the bag of money, which is your Enter Deposits and Apply Payments screen. You can also access Enter Deposits and Apply Payments from the Activities menu by clicking on Enter Deposits and Payments. This will open up your deposit screen. Your deposit screen contains all money that was entered either through the transaction entry screen if you've entered copays or by posting insurance payments here. One thing to note is that you always want to post insurance payments through the Enter Deposits and Apply Payment screen and not through the transaction entry screen. By posting through the transaction entry screen, it prevents you from transferring responsibility from a primary to a secondary carrier or to your patient if there's a patient balance left. Click on New, enter your deposit date, and select your insurance and payment method of check, and you can enter your check number. Your description field, you can leave it blank, or you can enter something in here. If you want to enter the date that's actually on the check, simply type in a date. It's just a text field. Your payment amount will be the full amount of the check, whether it's for 1 patient, 10 patients, or 100 patients. Select what insurance you received that check from, and your payment codes, if they're set up correctly in your insurance window, your payment codes will default. When we save it, we now have a check deposited on January 26th. We received that check with the check date of January 20th. It's from Aetna for $100, and it hasn't been applied to any patient account yet. To apply this check, click on the Apply button at the bottom, and it'll open up your payment application window. It's telling you here at the top that the insurance you're posting for is Aetna, and you can go in and you can start posting to your patients. So we're going to select our first patient, and we're going to click Enter, and it will show you here what insurances the patient has entered in their account. In this case, the patient only has a primary insurance of Aetna, which matches what you're posting for. It'll also tell you here you have an unapplied amount of $100, which was our full check amount, and we haven't applied that to any patients. In this window, it will show your date of service, your procedure code, how much you billed, and what the remainder balance is. To apply a payment, click in the payment screen. Type in the amount of the payment from the insurance carrier. If there's any deductible, type the amount in the deductible field, and this will be indicated as a patient responsibility on your patient statements. Your allowed amount will consist of your payment plus any deductible and any co-insurance amount. In this case, we have a $20 payment and a $10 deductible, And if the patient is also responsible for, let's say, a copayment of $10, we would add up those amounts and our allowed amount would be $40. This is generally indicated on